Today, I'm chatting with Simon Dyakowski from Aztec Minerals. We talk central banking policy, we talk gold, and we talk Aztec Minerals. All right, everybody, enjoy the interview. Simon, thanks so much for joining us today.
Hey, Steve, thanks for the opportunity. Good to chat with you once again.
Okay, so the big news this week for anybody who's investing probably in capital markets is the inflation print that we got on Tuesday. The Bureau of Labor Statistics published an 8.3% print. The markets were clearly expecting 8.1%. Simon, how closely are you following the inflation data, and what impact does it have on the junior mining world in general?
Yeah, I pay close attention, as I think everyone is right now. It's the dominant narrative, and really, what I'm interested in is the rapid ascent in the rates that we've seen over the last few months. And clearly, the market was pricing in a bit of a pivot, probably coming in September, and it looks like with this inflation number indicating some entrenchment, that it looks like rates aren't pivoting lower as soon as everybody hopes. So. That it was kind of a price to perfection move on Monday, and then Tuesday smacked us down. I think it was 1250 on the Dow, so very unexpected. And one thing that I'm looking at closely is the 1-year Treasury yield in the U.S. and as well as in Canada, and that's about 4%, which is consistent with. There's a strategist at BMO who thinks that we're going to 4, then pausing, and then maybe going higher. So I think the market's being a little bit optimistic about rates coming down as soon as everybody wants them to.
Yeah. So here's a take I saw on Twitter this morning. This is U.S. related, but mortgage rates. So we're talking about the 30-year mortgage rate is now above 6% for the first time since 2008. FedEx, they put out their earnings yesterday. The CEO is ringing the alarm bell for a global recession, saying that they're expecting a huge slowdown. Computer chip producers have fallen on weak demand. Housing prices are down 6% in 2 months. Credit card debt in the U.S. is apparently up 30% over the last 4 months. Do you think it's safe to say we're in a recession at this point?
I think they're always pretty delayed on how they define them, and it's usually backdated. But yeah, I'd say we're definitely contracting. I mean, things are breaking in real time, but the policymakers are usually reactive and not proactive. So I wouldn't be surprised if the National Bureau of Economic Research declares that this started many months ago, probably just like in 2008-9. The recession actually started, I think it was the second quarter of 2007, and it was long and deep. So it was there could be a similar setup here, I think.
So let's talk about gold for a second. Everything that's happened in the world in terms of inflation, in terms of all the money printing that's happened since COVID started, and gold is now it broke $1,700 this week. Last time I checked, it was $1,675 or something. You think that the gold thesis is dead? Why should investors still believe in gold?
It's such a tricky one to make sense of as an investor or somebody running a junior company. But I think the key is to look at gold over the very, very long run, and then compare how it's traded to various macro themes during the eras where you're looking at. So for example, 2020 gold had a fantastic run. It went from a low of about 1,500 in the March 2020 panic lows up to 2,000. And if you compare that to the CPI prints that followed, gold perfectly predicted the inflation that we're seeing now. Now gold's obviously struggling as the US dollar is strengthening, as the central banks and the credit markets are kind of readjusting to this inflation fighting era. So that's not a huge surprise. And then you mentioned like the technical level of 1675, which I think gold has touched like 4 or 5 times now. That is a very important number. So I mean, I none of us have a crystal ball. Like, if it doesn't close above 1675 today or next week, we could be going a lot lower. But I think the next thing, like, markets are always forward looking, the stock market, the gold market, the credit markets. I think gold investors should really set their sights on what's coming next in 6 to 12 months. And these interest rates are breaking the economy. You pointed out FedEx, mortgage rates, the housing slump that's getting underway, and gold will eventually be, a sought after asset to protect against those risks. So I think, I'm eternally optimistic about gold. I love it. I buy it every month myself. It's frustrating to see my net worth go down, every successive month. But I think, you got to look forward 12, 6, 12, 18 months, and gold is where you're going to want to be as all this rot in the credit markets becomes uncovered.
Okay, so let's put gold aside. What other commodities or asset classes do you like right now?
I like, this is a bit of a contrarian take, but I like oil and gas. I know oil's come off a lot. It had a lot of headline driven gains earlier in the year. And it's a bit tough to make sense of with the demand destruction that you're seeing in some parts of the world. But there's been such an underinvestment in the oil and gas space over the past, really like half decade because of various policies and previously just the low pricing that even if demand comes off a little bit, I don't think there's anywhere near enough supply to meet that. And then longer term, I think copper obviously has that same narrative where that's just a little bit different in that there's huge capex involved in building these projects, and many of them just haven't been coming on, and the demand obviously has been steadily growing. So I think long term, energy metals are areas that I'm pretty favorable on.
Okay, so let's talk about Aztec. The company just put out 7 drill results drill holes over the summer. What's the primary focus of the program? Can you walk us through the results?
Yeah, I'd be happy to. So we don't have the assay results yet, but we did start drilling in the summer, like basically late July. And we thought it would be a good idea to give the market an update on how that's been progressing. So what we've embarked on is about a 3,000 meter, 11, 12 hole oriented core drilling program. And so oriented core is a very exacting method of drilling where the core comes up exactly how it is in the ground. So the geologist can read the structures and get a very accurate picture of the formation that we're drilling into. So this is coming off the heels of a very successful RC reverse circulation drill program we did last winter, which is basically quicker and cheaper, but only gets you mineral information versus structure. So we're excited by this because it's, one, it's giving us this very important geological information, but two, it's stepping out. So it's hopefully expanding on the discovery that we made earlier this year. And that discovery, I might just touch on that. So we had a number of exceptional bulk tonnage, very wide widths of gold mineralization at the Cervantes project with a headline of 137 meters averaging 1.5 grams gold, and another hole hitting 167 meters of a gram. So great numbers. Those numbers caught the attention of Alamos Gold, mid-tier gold producer based in Toronto that has assets primarily in Ontario and in Sonora, Mexico, where we're located. So they came in May, June for about a $3.5 million financing. They became our 10% shareholder because they were, interested in what we were doing, and obviously big players in the region where we're working. And on the back of that, our joint venture partners decided to sell us their interest to consolidate the project under the Aztec banner. So we closed all that over the summer, the dead, boring summer where nobody was really trading stocks or paying attention to the market, but very important work that should really clear the runway for the market to understand our story as we continue to advance it. And continuing to advance it is what we're doing with this drill program. No results yet, but we should have them out in October, November, and we plan to keep going and expanding that oxide gold cap at the California zone at our Cervantes project.
Okay, so what does the next, 12 months look like for Aztec? What's the goal? What's the strategy? What are the timelines investors should be watching?
So the investors should be honed in on the next round of drill results from the 11 or 12 holes that we're drilling right now. And we expect those to come in October and November. So right before the end of the year. We've also started to look at some advanced metallurgical work. So that's a program that we expect to get underway in the next quarter. And then once we obtain all the data from this round of drilling and get going on the MET study, we would like to go back and continue drilling. And a great time to be doing that, just kind of weather-wise and scheduling-wise, would be early in the new year. And we're actually funded right now with that $3.5 million financing to get going on the next program as well. So results, metallurgical advancement, and then another drill program coming early in the new year. So we're going to keep the ball rolling and try to keep growing this very significant discovery that we've already made.
Awesome. Well, thanks so much for hopping on here, Simon. And as some of the results come in, hopefully you can come back on here and walk us through what the results mean for the company.
Yeah, I'd be happy and honored to. Thanks for the time today, Steve.
All right, everybody. Thanks for watching. And if you haven't already, please hit the like button, subscribe, and ring that notification bell. All right. Thank you, everybody.